3, 2, 1.
What's up, everyone? Dan here, Crypto Capital Venture, October 17th, 2018. I hope you're doing well. In this video, we are going to talk about, this is my opinion first off, we're going to talk about the bottom, where I truly think the bottom is, where I've been talking about where the possible bottom may be for some time now, but we're really going to dig in why I think it's the bottom, at least the bottom channel, and I think we're close. So let's jump right into the video and let's talk about this because it's probably one of the most important Bitcoin technical analysis videos that I'm going to do. And usually when I say it's the most important, it's when I'm on a zoomed out chart. To set the foundation for this video, we're going to talk about Fibonacci real quick. There's a Fibonacci. If you're new to this channel or if you've never seen the Fibonacci tool, that's the Fibonacci. Now, the Fibonacci sequence, Fibonacci numbers, really, if you want to learn about it, Google it. There's a ton about it. It's very in-depth in terms of mathematics, but really, to put it simply for you, what it is a series of very important numbers that apply to nature, to things like the stock markets, and even to things like beauty and music. And it's applied to so many different things, and there are so many consistencies with the numbers that they're used often across all different spheres. So for us, we're using it for trading. And I just want to set a very simple example of how we use it and how we use it on the channel. And you see me use it a lot. There's really two ways, and you see the perfect symmetry in wedges all the time when you look at charts, right? And I'm going to give you an example. So here's an example of the golden ratio in Fibonacci, right? And the example of a golden ratio in Fibonacci would be to take a high to a swing low and see where we get resistance right around the 1.618. That is the golden number. That's the golden ratio in Fibonacci. It's also, I mean, I don't know if I agree with this, but it's defined as the number of beauty. So people get their face measured, and when they have this number, the 1.618, when they have this number, it's a symbol of perfect symmetry, perfect beauty. So for context of this video, I just want to throw this out there. When you see wedges that really do look perfect over and over again, and right now I just zoomed in on a 4-hour chart on Bitcoin, you see rising wedges, falling wedges, and you see that Fibonacci resistance or support. And we'll do another one. So I'll take this swing high to this swing low, and you can see just below the 1.618, there's resistance again. So in terms of why we use Fibonacci in charting, this is just one example why. Another really good example is resistance and support. So resistance and support, the inverse of the 1.618 is the 0.618. And I just want to show you an example of this. And this is another example of perfect symmetry in terms of how things like Bitcoin move and why we use things like Fibonacci. So we can take, I zoomed out on the daily chart. We've been using this a lot in this downtrend, the Fibonacci 618 as resistance and support. And it's really this channel of the 618 to the 0.786. That channel in volatile markets, I use that 0.786 a lot. So let's take this swing high right here to this swing low to number 2, right? And let's see where we saw resistance. And you can see we saw resistance right here at the 0.618, the inverse of the 1.618. So this is my channel. If you've been watching my videos, this is my channel right here, the 618 to the 786 in terms of looking for support or looking for resistance, okay? And we see it time and time again in these markets, and it's crazy. It really is it's like looking at a painting, how perfectly it just sets itself up. So here we go, another swing high, right, to a swing low, and there it is. Resistance again met right at the point at the 618, right, in this channel, 618 to 786. And so we've been using this a lot on this channel, and we're going to really use it in a zoomed out version of Bitcoin in terms of maybe possibly trying to identify where the bottom is, a bottom channel. And so just to give you an example as well, I just want to show you, we've been using this on the shorter time frames as well. So I'm just going to zoom in on the daily. It probably would work better on the 4-hour, but we can zoom in on the daily, and we can take another swing high or swing low to swing high, and you can see boom, support 618 to 786. So you see me do this a lot in my technical analysis videos when we really do anticipate dips and swing highs really well. And you can see it illustrated right now on the screen very simply. It's really not rocket science, it's just numbers, and it really is just a smooth flow of movements on the charts. Really, it's really just like a perfect dance. These candles are doing like this perfect dance, setting up a really nice picture. And the really nice picture, essentially, in terms of what we're looking at here, is lower highs. I mean, that's really what we're looking at in terms of that resistance at the 618. So that's something I wanted to point out. Another thing I do want to point out, when you're using the Fibonacci retracement tool, basically when you're in a downward trend, right? So Bitcoin obviously has been in a downward trend. What you're looking at mostly is you're looking at resistance, because we're always trying to find that breakout area. So we're always looking at that 618 for resistance, because when we finally do break the 618, that means we're going to start possibly turning around in the market and breaking previous lower highs. So in a downtrend, we're looking for resistance. In an uptrend, we're looking for support. And now we can pivot over to what we're really here for, which is to say we are here for the uptrend, the long-term uptrend. You can see it here on the weekly chart on Bitcoin. There it is. And so we're going to start back in, really 2011. And I want to show you how the Fibonacci retracement to that channel that we talked about, the 618 to 786, has really proven itself consistent and true through all of these years. And it's really the basis of what I'm doing in this video, and also the basis of my own risk tolerance. I know I can be wrong. I know I know Bitcoin can go to $1,000. I get it. I'm not saying it's guaranteed that we're going to see support at this channel, but I am saying I believe it's a strong likelihood, especially with all the bullishness happening in Bitcoin right now. So let's just start. I just want to kind of go through this with you, and we're going to look at Fibonacci channels. So just for starters, what we have on the screen right here is back in 2011. We can take that low to, we can take that swing high, and we can see, all right, where did it retrace to in terms of support? Where did it retrace to? And you can see, could get my brush, swing low to swing high, retraced right back to this channel, the 618, right there, to 786. And then what I'll do is delete that, and there's the channel. And you can see we saw support right there, and then we kind of traded sideways, and then we made our next run. So that next run, you can see from the swing low to swing high, you see it again. And I think there we go. So swing low to swing high, channel of support, 618, 786, and a bounce to the next parabolic move. Okay, so I'm not going to keep bringing out the Fibonacci retracement tool, but those green rectangles are basically the retracements that Bitcoin saw. So next parabolic move from that 2012 to the swing high 2013, and then back down right into the 618 to 786 channel of support. We've used this so much over the months in terms of the daily charts and the 4-hour charts, and it's really fun to look at this on the weekly charts as well, because these numbers are very key in terms of where we're going to retrace to. Where's the market going to find the bottom? So in terms of the big one, right, and what I'm talking about with the big one is that bear market that we had, that huge retracement that we had. This is the one, I don't know if I'd call it an inconsistency, but it's the one thing to really evaluate and think about. So we have this low to swing high, right? That bull market, and then we have the bear market that we always talk about that happened a few years back. And you can see it was a nice slow consolidation to find its bottom. And here's the 618 to 786 channel. So one thing I just want to point out is you might be saying, well, Dan, we went below even the 786. And I'll just show you on the Fibonacci real quick to show you exactly how far below we went. So you can see the 786, and I think I messed up this triangle or this rectangle. So The 786 is right there. 618 is right here. So you might be thinking, Dan, we went below the 786, so this proves everything is wrong. And you're right, we did go below the 786, and this channel support would have really failed if you were using it. But one thing I want to point out that we use other indicators for is we don't just use Fibonacci, right? We look at other things to get a gauge of, well, what's the momentum like right now in the market? Where are we seeing momentum slow down? Where are we seeing volume? And that's important when balancing your risk tolerance in this market. You can't just use Fibonacci and get in and out, or just accumulate at levels just because Fibonacci retracement tells you so. So we use other things. So back here, you can see when we broke out below the 786, one thing that's very important to take note of is the fact that we basically broke through the 30 line on the RSI. And that's like a pretty strong break too. So that was like our moment of being officially oversold. So essentially, and when it comes to the RSI, anything below 30 is considered oversold. So the market at that point of breaking through the 786, I mean, that is like the heavy accumulation area. And I'm sure there were people, builders in the space, just accumulating this entire time because they saw these things. Not only were we oversold in terms of breaking this really key channel in Fibonacci, but we're literally oversold in terms of RSI and momentum oscillators that we look at as well. So this would have just been a great indicator to buy, and accumulate. And could you imagine accumulating, at the $200 range for extended amounts of months, right? Building up to the next bull run. I wasn't doing it. I wasn't here then in terms of investing in Bitcoin, but I wish I was. So we use other indicators along with Fibonacci to really tell the complete story, to really help us find our risk tolerance and what we want to do in terms of accumulating and our portfolio. So now let's get to where we are now. I mean, maybe you'll click the timestamp because you just want to get to this point. And so I'll put the timestamp there for you. But we really did just explain the Fibonacci, the importance of it, how it works. And now we're here where we are, which is to say, let's take the Fibonacci from that previous low, right, to that previous swing high that many of us experienced. And let's find that channel. So that 618 to 786 channel is on your screen right now in the green rectangle. And here we are, we're in it. We're in it. And if you look back at all these parabolic moves that Bitcoin has had, you can see while being in it, we've defined the bottom, except for when we were in it in that bear market. But when we broke below it in that bear market, it did prove to be a phenomenal time to accumulate. So keep that in mind, because breaking through it right now, the 786 is around $4,400. This is now, we're getting into my approach to these markets. This whole area within this Fibonacci is for me, I'm safely accumulating. For shorter term technical analysis reasons, anything below 5,500, I'm heavily accumulating. So basically, anything below right here, I'm heavily accumulating. Now, we might not have an opportunity to ever get there because we are right now within that 618 to 786 channel, which I really do believe signifies a bottom for Bitcoin. And it could signify a bottom even if Bitcoin goes a little lower and we do touch $4,400 or the 786 in the Fibonacci retracement. However, no matter what, I think this green rectangle symbolizes a lot, because this is a time when I've seen a lot of people exit the market, and I've seen a lot of builders and innovators and smart investors accumulating more. I think that says a lot in terms of defining a bottom, because you have a lot of fearful people exiting the market, but you have the smart ones, the VCs, and we just covered this yesterday, that are investing now, that are building now. It's the perfect illustration of a bottom. Could we go lower? Absolutely. Could we even pull the type of scenario that happened in the bear market where we actually break below the 786, which in terms of where we are now, that would be below $4,400? Absolutely. And right now you can see, if we open up the RSI to kind of talk about what that might look like, the RSI is right now at around 45. that oversold area is down here at 30. Could we see another type of bear market that leads us to be oversold, even for just a short period of time, like we were in that last bear market? Possibly. And that would definitely lead us to be breaking below the 786 for a time. So really interesting, I think, in terms of finding the bottom. It's literally the best context we have for a bottom. That's why I say this is the most important video that I do on Bitcoin technical analysis, because right now in this huge pullback that we had, it is the most important question everybody has. Where is this pullback taking us? And this, I think this Fibonacci retracement, I think these numbers that you see on the screen, I think where the market right now is, tells the perfect story of why the bottom is in, or at least we're in range of the bottom. Just want to throw this out there that we could still have some pretty deep downside if we're just focusing on this Fibonacci. So right now we're at like $6,400. That 786 on Fibonacci is still around 31% away. So there could be some more downside. So take all this into consideration as you plan your portfolio, as you kind of gauge your risk tolerance. And as always, don't spend more than you can afford to lose. This whole video is not financial advice. It's not even so much a prediction as it is just my outlook on the market and what I'm seeing on the charts. Do you agree with what I'm seeing on the charts? Do you see the synergy in these numbers? Apologize, I couldn't explain the Fibonacci sequence, the Fibonacci numbers to the best of my ability, but I'm not a mathematician. I don't even like numbers, to be honest with you. So, however, the tool, the indicators, they work, they help us. Thank you so much for watching. Let me know your thoughts on this. Do you completely disagree? Do you think I'm way out there? Let me know. I'm curious to know. I'm grateful for all of you coming by today. If you're not a subscriber, please subscribe. I'd love to have you as part of the channel. I will see you in the next video, and God bless.